All right, everybody. Welcome to the session here today. My name's Rodrigo. I'll be here with you and with Mark Putrino, former hedge fund manager, traded there with Steve Cohen, Mario Gabelli, multi-billionaires, and worldwide known institutional traders. And we have a couple things packed for you guys. Before that, I do have to give a couple shout outs here. Of course, we have Bradley in the house, Charles, Donovan, Edwin, Joseph, Jamar. What's going on? Peter, good to see you. Roger, Suzanne, William, good to see that. All right. Yeah, definitely not missing out a session there. And that's good to see that, guys. All right. So we have a couple things we have to go over really quick before we do get started. So, a couple shout outs there, right? In the chat, let me know when you're ready to start. We had a timer so that everybody could, kind of make sure you're ready here. So, what's going on, Mary? Good to see you. Clark, what's up in the YouTube chat? Let us know in the chat if you're ready once you're good to go so that we can get this going. For those of you that were asking where Mark Putrino was, basically he was in the trading school, and from there he has a live trading room where he's posting trade ideas, talking with students, and also doing live classes Monday to Friday. So, so yeah, we'll be talking about that. Couple topics. We're gonna be talking about sector scoping, education for trading, setups for equities, technicals, market discussions, buys and sells, a whole lot of things here that definitely packed into what happened, especially after the Fed came out. So also make sure to stick around until the end because we do have a Q&A and a real-time view of the Benzinga Trading School that we'll be showing to you guys. So MG Martin, man, you never miss. I love that. All right, MG Martin, good stuff. Love to see the energy. Rachel's ready. Bradley's good to go. Joe's is ready. Let's go. Let's bring in Mark Putrino,
Rodrigo.
lead trader and also chief educator at the Benzinga Trading School. How are we doing, Mark?
Doing good, Rodrigo. How are you?
I'm doing good, man. It was a great day. Well, I know in the school, the classes are day to day, so there's a lot of learning going on, but definitely breaking down the action with the Fed, how to trade around it, how to hedge, all those things. What are a couple of things that you can tell us about the trading school? I know it's been an interesting week there.
Well, first thing I want to say is that's not me on the cover there. Okay, I'm much better looking than that guy.
That's a good, man.
All
Yeah, we
right,
were
so
we're supposed
I
to.
just want to say it, and frankly, based on his recent decisions, I would probably be able to say I'm smarter than him too, even though I'm not that smart. But anyway, um, yeah, no, it's been really cool. I know the market's been kind of like getting broken up and stuff, but today I one of the students actually said, and I mean I can't verify this, but I have no reason to doubt them that they literally made 1,000% on a position today because they bought puts on the SPY, the S&P 500, for, and I can show you why they did because yesterday we hit resistance around 430, and I think this is a person who like 2 months ago didn't even understand that they can make money when the market was going down. I even saw today as some of the pundits in the media, like, market's going down, what should you do? And people are like, well, you should go to cash. And it's, you don't need to go to cash. There are ways that regular retail investors can make money if the market goes down. You don't need to be an options trader, but there are ETFs that trade inversely. So there's a big part of trading is not just understanding trading strategies, but understanding the universe of all the different things that you could trade and get exposed. These days with all these ETFs, like regular investors can get exposure to all kinds of different things. Like some of the students are making money in natural gas by buying the natural gas ETF. Rodrigo, I think you're muted.
Yeah, yeah, really quick. I wanted to go over the a chat from Zoom, from Mary Forever Truth 1206, saying I had a great day today and attributed all to these lessons. I made $400 on puts on a firm and $1,000 on SPY.
Oh, awesome. Thanks, Mary. I
So
don't
this
know
is
who you are if you have a different handle in the chat, but that's okay. You don't have to show up and let us know you're there, but awesome. That's great. I love that. I love hearing that. It's one thing if you can make money when the market's going up, but if you can make money when the market's going down, it's just such a great feeling.
Yeah, and here's the thing, Mark, because we started the school in August, right? And last year. So
September, right? So late, yeah.
so at this point, you do have several students that are, that have picked up the pace and are now more active traders, right? It doesn't and then the community that everybody there is learning together, trading together. And then you have students that not only are learning, but they're helping the new students out, get a like, hey, try to use this to help you and such. So it's just good to see that even when the markets are going down, the students in the trading school are doing great. Even markets are going up or down. It's something that when you apply the education above anything, I think that's really what ends up becoming the best type of trade at the end of the day.
Yeah. Um, yeah. All right. So let me show you guys what I'm talking about and why today's move lower was really not a surprise, frankly. Um, the most important thing about trading is understanding certain fundamentals in the market. And I'm going to share my screen here so everyone can see what I'm talking about. If that's okay, Rodrigo.
Yeah, let's go. That's it.
All right, so I'm going to bring up the S&P 500. This is actually an ETF which tracks it. SPY is something that we follow. But the way markets work is because there are certain levels and trends that are more important than others, right? In the institutional trading community, no one's worried about like weird esoteric things like Elliott wave and Gann theory. We look at what levels are important, what trends are important. So yesterday we had this big move higher, right? Now this is the S&P 500. So we had this big move higher. And what happened? It stalled out right around this level, 430. Why did it stall here? It wasn't a coincidence. This level was resistance. Okay. See how it was the top there, the top there? It was resistance here. This is a little bit of an anomaly because this is like the Ukraine thing. So we almost can, for our intents and purposes, we can kind of ignore that. Now, here's the thing. We had a good idea that there was going to be resistance at this level for a particular reason. It had been a support level. The class has 8 different lessons, and lesson number 2 is about levels, how some price levels are more important than others. Okay. It sounds simple, but it kind of is, but this is how we can understand what the markets are doing. So the reason why it wasn't a surprise that we ran into resistance when we got around 430 is because it was a support level back in October and January. So what happened back here? Well, there were a lot of people that bought. The stock was in a downtrend, or the shares were in a downtrend. People bought, went higher. Now, a lot of these people, let's pretend they didn't sell. When it goes lower, they say to themselves, oh, I shouldn't have bought it. I made a mistake. I want to sell, but I don't want to lose money. So here's what I'm going to do. I'm going to offer my shares or try to sell them at the same price I bought them at. In this case, it was around 430. So that's why there was resistance there. So when you understand which levels are important, you understand where the market comes to, where a trend can change. Now let's talk about buying the dip, right? How can you recognize a bottom? Now, this is the S&P again, right? Back here, this was, if you listen to the media or the pundits, all you would have heard about back here was Ukraine. Markets trending lower because of Ukraine, right? Sounds logical, whatever. Markets trending lower. There's a lot of bad stuff going on in Ukraine. So the market's going down. And what happens here? Well, we found a bottom and we started going higher, even though the stuff in the Ukraine is getting worse. So you don't need to be a market genius to understand that this is, this had nothing to do with Ukraine. The market is, what goes on in Ukraine is terrible, right? But as long as it stays contained there, it's not really going to affect our market. So how did we know, or how did we get insight that this was a chance, or there's a good chance this was a bottom? Well, what we do is we look within the market. The S&P 500 is, it's a bunch of different parts, and there's 11 different sectors. So the technology sector is the biggest sector. So this is the same time frame here, like right here. Look what happened. We're having the sell-off. We came to a bottom around here. Why? Well, back here, last April, this level happened to be an important resistance level. So for some reason, I don't know why. We don't need to know why. We just need to, like, see it here and we can take advantage of it. But a level that was important back here became important here. So when you're looking to buy the dip, when things are getting crazy and things are getting oversold and so forth, one of the ways you can kind of figure out where there potentially could be a bottom is to look into the past, which is here, and see if there is a level that was important before. Excuse me. So, buying the dip, what we're doing is we're looking into the past for particular price levels that were important. For some reason, some levels are important. For some reasons, some aren't. We don't really need to know. Like, look at this level here, right? I guess we'll call that 164. You don't need to be a market guru to see this, right? It was a clear support level. Each time it got down here, people bought it. Then the level turned into resistance. Now, why did this happen? Well, there's a lot of people who bought it here who thought it was great when it went higher, but then it goes lower. A lot of these investors are now remorseful buyers and they want to get out. So they try to sell their stocks or their shares, at the same price they bought it at. So if there's enough of these sell orders placed by remorseful buyers, the level that was support converts into resistance. And that's what we see here. So this, Rodrigo, is one of the ways we can identify levels. And if we're thinking about buying the dip, and we're going to be coming to some big dips pretty soon, and we have been coming to big dips, is by kind of looking into the past and seeing where the important levels were, because there's a good chance if it gets to it, it's typically things don't just reverse at some random level. They reverse at a level that was important before. Like, for example, it reversed here because the level was important here. It reversed here because it was important there and there. So it sounds kind of simplistic, but in the trading school, we just focus on common sense and logic. In the institutional world, where I was for 25 years, I got hired out of business school from Mario. I worked there for a few years. Then I worked for Stevie Cohen for a while. Then I was a head of trading at a couple of different funds. So I can tell you firsthand what goes on in the institutional hedge fund world. And it's not as crazy as you would think. No one has a secret model. No one's looking at like arbitrary, weird, esoteric things like Gann theory and Elliott waves. What we're looking at is, where's the price level? Where might the thing turn? We focus on levels. Class number two is, class number two is levels. Class number three is trends. Markets are always trending, downtrend, uptrend. So Rodrigo, I think one of the things I want people to understand is that it doesn't need to be that complicated. If you can understand supply and demand, you can understand how to effectively trade the markets.
Right. So in
this over the last few days with a lot of the students.
Right. So let's go over. I know that you called the bottom in oil back last year. I remember when it was $60. And, right now at this point, what are a couple of trades, recently that you've made ever since, the whole inflation thing started taking off? What are a couple of trades that the folks have made there in the trading school?
First of all, I would say that that the performance of Jerome Powell yesterday, in my opinion, was pretty weak and pretty lame. And these guys have been wrong for a long time. And the reason why is they follow what they call this like Keynesian theory. Like Keynes was an economist. And to make a long story short, not to bore you guys with economics, but there's the supply side of the market and the demand side of the market. The Keynesians focus on the demand side. So guys like Powell and his cronies over there, they're following this academic theory where they're really just focusing on the demand side, meaning how much do people buy, how much do people sell. The supply side is how much stuff is out there in the market. So they've kind of not really understood how important the whole supply chain thing is. They clearly don't understand how important the printing of money is. I mean, if if I think if this Build Back Better thing went through and was fully funded, we would actually be in a hyperinflation now, as opposed to just a regular nasty inflation, which we haven't seen in 4 decades. So I suspect we're still going to have inflation, and I would suspect it's going to weak for the markets. So there are ways to play this. Like, one of them, from a longer term point of view, is to invest in inflation-based or commodities-based ETFs. Now, let's just take a look here at the stock market, right? So since the market really started to sell off at the beginning of January, the peak was right into the end of December. So we've gone from 176 down to 141. Now let's take a look at this, which is the CRB index. This is an index which is a basket of different commodities. It's got, oil and gas and agricultural things like wheat. Look at that, but double X. Right. So this is a measure of inflation. And this thing is up way more than the Fed is talking about. Like, so since the beginning of the year, it's gone from 233 to 313, right? I mean, that's, what, I don't know, 30%. I'm just kind of roughly guessing. So how can you tell me that inflation is going to be 4 or 5% when we have commodities going this much higher, right? So bad for markets. What should you do? Well, there's different things you can do. One of them is a lot of the students are in this particular ETF. I'm not endorsing it. There are other ETFs that track this too, but this is an ETF that follows an inflation index. So while the stock market was getting crushed, this thing has gone from 20 to 28. I mean, it's up huge. So if you got out of equities and got into something like this, and this is just a simple ETF, it trades just like a regular stock. Any retail trader can buy it. This is a way to hedge your portfolio or to even profit from inflation. So I also see something a little interesting here. One of the things we talk about is chart patterns in the class. Now, in my opinion, a lot of chart patterns are kind of bogus and not really worth thinking about. And frankly, a lot of stuff in technical analysis is wrong. There's a lot of technical analysts out there that frankly don't know what the heck they're doing. And some of them are even popular people you might see in the media or on social media. And I think the reason why they don't get it is because all they've done is read books and look at charts. They've never actually traded like a guy like me has. I spent years not just looking at charts, but actually trying to put this stuff into how can it help me trade? So anyway, there's a lot of patterns. Everyone loves the head and shoulders pattern. There's something about that, although they're pretty rare. But something like this is not that rare. This is what we call an ascending triangle pattern. And the reason why we say that is because, well, it looks like a triangle, right? And we have this ascending line. So let's think about this. Every chart needs to be viewed in the sense of what is it telling us about the supply and demand? So this thing rallies, gets up here. This is where the sellers overpower the buyers and knock it back down, around 28. Goes back down, gets back up, gets pretty close, 2750, comes back down, gets back here. Sellers overpower the buyers again, comes back down. So think about this. These sellers have hold their ground. The sellers have stayed there. The sellers have said, I'm staying at 28. Now, there's a lot of other sellers in here and so forth, but I'm talking about like a large part of the crowd. They're like, I'm staying at 28. I'm going to sell it. If they come to me, I'll sell it. If they don't come to me, I don't care. I'm not going to break my price. At the same time, you have buyers who are getting more and more aggressive. That's shown by this ascending line. The buyers are not willing to stay at their same price. It's not going sideways. As time passes from March till now, the buyers are becoming more antsy and more eager, and they're willing to pay higher prices. And that's what drives it up. So the reason why this ascending triangle pattern is bullish most of the time, it's not guaranteed, is because it shows this dynamic of aggressive buyers and complacent sellers. So it doesn't matter what market you're in, retail, you could be selling shoes, you could be selling commodities, you could be the housing market. If you have complacent sellers that are just like, yeah, whatever, man, and you have buyers that are like, oh, we got to buy it, we got to buy it, we got to buy it, that tends to drive the price up. And that's what the ascending triangle pattern illustrates on a chart. It's a graphical illustration of supply and demand dynamics. So there's a good chance this thing breaks through here and keeps going higher. So that's the ascending triangle, and like I said, a lot of patterns I don't think are really valid. A lot of people spend too much time trying to say, oh, this is this pattern, this is that pattern. It doesn't matter. You don't need to remember the names of them. You just need to understand these dynamics. And a lot of the students, Rodrigo, are picking up on this. And a lot of them have really done very well over here in the natural gas world. Okay. And I actually, as a matter of fact, isn't that one of the things that we talked about in the Twitter space yesterday, UNG for an ETF? So this is natural gas. So again, we see an ascending triangle pattern, right? Which is a bullish thing. Chill complacent sellers, buyers becoming more aggressive, sets up the stage for a move higher. The descending triangle is the opposite. The buyers in this case are now chill. The buyers are willing to hang out at their level. They don't want to pay up. They're like, yeah, if I buy it, I buy it. If I don't buy it, I don't buy it, whatever. I'm just going to hang out and wait and see if they come to me. But the sellers are getting more and more aggressive. So you have aggressive sellers complacent buyers. So I don't think we got this trade here, but I know a lot of the students got this one here. And they're not buying natural gas futures, they're buying ETFs that track this. All right. So here we go again with our important levels. What happens to natural gas? It breaks through, it sells off. Where does it find support? And I know a lot of the students got in right here because we were talking about support. Why is this support? Did I find it in an astrological chart or a vision quest, or did I get lucky? No. It was a resistance level. Levels that were resistance can turn into support. Market's going down, you want to know where it's going to stop, look into the past. If you see a level that had previously been support or resistance, there's a good chance it stops. So here we don't have buyer's remorse, we have seller's remorse. People sell, they think they're great when it goes lower, it goes higher, and then all of a sudden they regret their decision and they say, I'm going to buy it back, but I don't want to pay more than I sold it for. So they put their buy orders at their selling price. If there's enough, the level that was resistance converts into support. And you can even see that. I put a question mark on that because I probably put this chart here back on April 25th. So then we move higher, right? Then we get up to this level, we break out. And Rodrigo, this is the thing we talked about yesterday that a lot of the students are in, because I know a lot of them are not futures traders, but this ETF, this natural gas ETF. So, Rodrigo and I had talked about this yesterday as a potential buy, as a play on natural gas. And look, it's up today was up 3.8%. In the aftermarket, it's up 90 basis points. So in 2 days, that's a 4.6% move. That's pretty darn good. And especially if you're trading options. So a big part of the class, Rodrigo, is that, it's like teaching people how to gain exposure to different parts of the market, to different trends, right? A lot of times markets are going down. People don't know what to do. They put their head in the sands. But there are ways regular retail investors can hedge themselves and even profit from all this stuff.
Right, definitely. And that's interesting. You cover a lot of these things in the trading school, and several of these trades, that you do provide. So you do have a live trading room, correct? With
Yeah.
school?
Yeah. Every day we talk about trading ideas, and it's not like here's my trade of the day or anything like that. There's different themes, different students have different philosophies, they have different styles, There's no one right way. Like some of the students, I don't think they really are, into the commodities as much as they're into, like, say, the tech stocks or the penny stocks or the cryptos or options. So we can develop a theme, right? And what is our theme? Our theme is, inflation. Oh, here's a fast trade inflation, breakout. Say you bought the calls on this because of the breakout. You could have done very well today. What's our longer term theme? Well, inflation in longer term is going to continue to go up. So we have this here, different themes. Like today, one of the things was, one of the reasons why we had a good idea that this market was going to reverse was because of this action in the financials. They ran into resistance at this level, a level that was support. People bought, it went lower. People that still held it regret buying, so they say they want to get out of it. They try to sell their shares at the same price they bought them at. And if there's enough of those sell orders, the level that was support turns into resistance. And that's what happened here. But you don't need to trade this specifically. This is the sector. A lot of times what we do is we see, all right, this sector looks particularly vulnerable. Like, for example, yesterday after the close, it's like, all right, well, this thing is at 36. So the financial sector is at an important level. And when things get to important levels, they don't tend to hang out for too long. They tend to break one way or the other. So a big part of being successful is waiting to see which way they go. You don't want to guess. You're not going to get the best price, but when the trend is going to be so much more in your favor, the odds will be stacked more in your favor. So when it was apparent that this thing wasn't going to go through here, a lot of the momentum traders came in, and this thing today was down almost 3%. So knowing the financial sector is weak, we could look within the financial sector to see if there are stocks that are particularly weak, because this is an aggregate or an average. So I just happen to know the biggest stock in the financial sector is Berkshire Hathaway, Warren Buffett's company. Now, all right, so now let's see what's going on here. So this right here is a potential trading idea, if you ask me. This level was resistance. We, had this move higher, we got lower, but for some reason, this level 325 is important. I guess people like nice psychological levels. We're kind of toying whether this is going to be support or resistance, or I'm sorry, whether it's going to be support and we're going to move forward, or it's going to break down. Now it's kind of looking like it's going to break down a little bit. So this is a potential that, because of the weakness, right? It looked like it was going to get back above this important level. It's all about the levels, and it didn't. And now it looks like it's way down, on its way down. So this could be a potential trading idea here. If this thing looks like it's going to trend lower, I would be looking for support around here, because levels that were support can become support again. Now, if you don't short trade, if you don't short stocks, and if you're kind of new and you're inexperienced, I highly recommend you don't short stocks. But what I would recommend and encourage is that you learn a little bit about options. So you could potentially maybe buy options one day. But if you're just someone who just trades stocks, take a look at this ETF. And this is the Drexon family. This is a friend of Benzinga. And these guys have a great selection of all different kinds of ETFs that are leverage or inverse for people that don't want to trade options. And frankly, some people that are really aggressive actually trade options on these things. But this thing is designed to move 3 times inversely to the financial sector. So today we saw the financial sector was weak. Look at this thing. It was up 9% today, right? So if I think some of the students bought the FAS. I'm not sure. A lot of the students, they buy stuff, but they don't want to, they don't want to tell us, or they don't want to tell me. But whatever, that's cool. A lot of people are very involved. Some of them are kind of on the sidelines, but everyone's got their own style or whatever. There's no right way. But anyway, if you saw this yesterday, not going to get through here. It looks like we're going to open down this morning. You can go over and buy this, and you would have been up, 9% today. So one of the themes of the class is, or, I think one of the themes of successful trading is that you let the market tell you what to do. You take what the market gives you. In our class, I don't teach that we're like champion traders or we're market gurus or we're, whatever. We're students of the market, right? And when we see things that are out of equilibrium or in equilibrium or look like they're going to make a turn, that's when we get involved because we're letting the market tell us what to do.
Right, right. No, that makes sense. And can you hear me there, Mark?
Yeah, I can.
Yeah, so I'm getting a lot of emails here from a lot of the viewers. We have about like 600 people here watching live, and they're sending a couple of emails here with some questions. So I'm just going to knock them out really quick here,
Sure.
and then we can carry on here with the lesson, right? So these are questions from you guys that you guys are emailing me, by the way. So we're going to go through them here really quick. So does Mark Putrino go over student trade ideas? Yes, he does. That's a regular, something that happens every day. Are the sessions recorded? Yes, everything is recorded and uploaded. The sessions are live, but if you miss them, you can watch the recordings as well. Good question there, Phil. Does everybody that joined get a free laptop? Yes, that is true. Everybody that joins will get a free laptop until midnight. Make sure you see a checkout, a laptop in the checkout. Does this help me? Can this help me if I trade options, crypto, commodities, or uh, Forex? Yes, we actually do have traders from all those that you mentioned. So very interesting. But yes, this actually is the foundation to actually trade anything out there, really. Michael in the Zoom chat asking what time are the lessons? So the lessons are Monday to Thursday, 7 to 9 a.m. Eastern, and then 12 to 1, and then Friday from 7 to 9. And you have a live trading room with Mark that is pretty much open Monday to Friday, 9 to 5. So questions as well, all that sort of stuff. Good question there, Michael. Um, let's see. Is this for new traders only or advanced traders? Well, we have both. We have people that are advanced that, really do enjoy trading and getting trade ideas and just bouncing ideas off of Mark, and people that are new that really not only want to learn how to trade better, but read the charts, but also understand the markets, right? And have that ongoing mentorship, that trading partnership there with Mark, former hedge fund manager. Good question there. Let's see. Have a couple more here. Is there a money back guarantee? Yes, there is a 7-day money back guarantee. And what is the price at renewal? That's the same as today. So 70%, 65% off till midnight. Um, and I think we covered everything there. Is there anything you want to add there, Mark?
Someone asked about the student trade ideas, and yeah, we definitely talk about trade ideas. As a matter of fact, some of the best ideas we have been student trade ideas. I don't see anything. I'm not an all-seeing genius or anything like that. It's a class, and a lot of learning comes from brainstorming, discussions, so forth.
What are these chats? So there's a couple chats here, right? Which ones are the ones with your trades and your setups?
Um, oh, I don't know. Go into general discussions there and see what's been going on.
Is
Yeah,
it
the
this
next
one?
one up. Well, yeah, there's Mark trade ideas. There's a bunch of the students were in general discussions. So yeah, so that's my trade ideas. I just kind of go through. Oh, there's the natural gas thing we talked about there. It's one of my newsletters. So we have a newsletter every week, which is just kind of a overview of what I think are kind of the most important things going on in the market that we need to focus on. Different things drive the market at different times. You know what I mean? So today,
Right.
like a big part of it was financials. Going forward, we have Apple and Microsoft basically sitting right on important support levels. And if those levels break, we're going to get into another big, nasty sell off. So, like today was kind of about the financials. Tomorrow is going to kind of be about Microsoft and Apple. And I can show people when they're ready. But yeah, different things drive the market at different times. So this is a good time to be a trader. I mean, like I said, we had students that were really, doing very well because as ultimately we want the market to go up. But when a market's going down, you shouldn't fear it. There are ways to profit from it. And in some ways, it's actually easier to make money in down markets from a trading point of view, because markets go down faster than they go up.
Yeah, so basically this is something you just added from what I understand, and this you go over, like it's like a good review, right? So people not only are they learning about the lessons of the current market, but you actually are breaking it down as a former hedge fund manager, that traded with Steve Cohen, Mario Gabelli. You've been in the pits there with these guys, in the high intensity trading there. So the fact that you can help them kind of visualize, hey, folks, this is what's happening in the markets. This is what we're looking at, and this is separate from the actual lessons, right?
Yeah, it's just kind of an add-on or a way for the student, something for them to keep notes on, or it's like a map. It's like the roadmap of what we're looking at this week, and within that map there's going to be all different kinds of ways to trade it and profit from it.
Right. And what can you tell us about this class? I mean, it's my favorite class, but a lot of people seem to like it too. It's the investment psychology class. What can you tell us about that particular? Because I don't see much covering on that really. And I guess if you don't have that down, nothing else matters, right?
Yeah, that really is the most important thing. That really is, the psychology really is the secret. Is people ask me, oh, you work for all these great traders, blah 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 blah, you make all these great market calls, blah 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 blah. But it's like, what is the real secret to being successful? It's not having like some secret system. It's understanding how to handle your emotions, right? And I'm sure a lot of people that are listening like right now, Rodrigo, are here because they might have lost money. And why did they lose money? Well, because they probably made irrational decisions. Now, if irrational or emotional decisions, right? Now, every trading style in the history of mankind has losses. There's no such thing as a perfect trading system. You know what I mean? The difference between the people that are successful and the people that aren't is the people that are successful have a better handle on their emotions. Let's think about a paper trading system, right? Paper trading. That just means you're writing down your trades on paper. You're not actually putting real money into them. A lot of people have good paper trading systems, but when it comes to real money, it doesn't work out as good as they thought, right? Because they're letting their emotions take over. Say your paper trading system says, all right, you should buy this particular stock at 10. And if it goes to 15, you're going to sell it. And you buy 1,000 shares of it in your paper trading system. So you invest 10 grand. All right, say it goes to 12 or 11, 12, 13, 14, 15. You say, hey, cool, man. I went up 50%. The stock acted the way I thought it was going to work. This is awesome. Great. Now, let's pretend that's real money. You have 10 grand in the market and it goes to 11, like Spinal Tap, right? It goes to 11. But let's just say it goes to 11. Now, all of a sudden, you have $1,000. It's like, wow, man, that's $1,000. That's real money. Maybe I should cash out. I could use this to go out or, whatever, take my spouse out to dinner. All right, I'm going to hold back, whatever. It goes to 12. Now you got $2,000. It's like, oh man, now I could pay my bills or pay my rent. Or then it goes to 13. Now you got $3,000. So you see, when you have real money on the line, you have this emotional desire to take it out. I mean, that's just the way humans think. But on a paper trading system, it's easy to let it go higher, right? In the real world, your emotions take over. So that's why we have a class on investment psychology. And I think that's kind of the, people, I think a lot of beginning traders don't understand how important that is. And I give it we use a lot of analogies in the class to different things. And one of the analogies we talk about a lot is golf, because I like to play golf. Even though I suck, I still like to play. But now my brother, a few weeks ago, went out to this place in Arizona where they call it the stadium course. There's one hole that's a par 3. It's a very short hole, and it's got a big stadium where it's not like a football stadium, but like maybe 10 or 20,000 people sit there. So this is a place the pros play. It's a very short hole, right? It should be very easy for these guys. And it is until there's 20,000 people watching them, right? So what happens? Some of the best golfers there are, they hit the ball into the water, blah, 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 blah. The guy like Tiger Woods comes along and it's like, he can handle the emotions. He can handle the emotional pressure. And that's why he can put the ball right by the target. So, investment psychology is very important. We have the herd mentality. People think that, that people have this innate instinct to want to join a herd, right? Like, just think about this. This is another one of my analogies, which I'm so fond of. Pretend you're driving down the highway. You come up to a toll booth, right? There's 20 lanes, and all these cars are lined up going through one lane. Most people just jump on that line. That's the herd mentality, jumping on that line. That's the same thing that makes people say, oh, what should I do? Oh, this person in this particular chat room said do this. I'm going to go do what they said. That's herd mentality. That's bad. If you could think for yourself and look around the traffic and say, wait a second, that lane down there, there's no cars in it. I could just drive up and drive right through it. And you drive right up and you drive right through it. And then you look in your rearview mirror, you see other cars following you. But the point is that humans are, we have these instincts, we have these emotions, and that's what really causes people to lose. They overtrade, they get overly emotional, they buy a stock, it goes up, they fall in love with it, it goes down, they still hold it. It's Rodrigo, the secret, I think, well, actually, I don't even think it. The secret is the psychology, and no one's ever going to be perfect. But one of the things we do is we can develop like trading models to combat this. Now I'm going to show you guys something over here on Benzinga Pro, and
You have to take over the screen there. There you go.
you got it. Okay, cool. So we have 8 classes, right? The classes, each class covers a fundamental of the market. And we have our 8 classes, and then we start again. There's no like you took 8 classes and it's like, see you later. And in the classes, we cover particular fundamentals. And then we look into the real market to see how they could be applied. So today's lesson was trading models. So I can just show you guys a simple way to make a trading model. Let's just pick a stock. I don't know, some random stock. All right, I guess we'll just start off with this. Actually, let's find something that's a little more volatile. I don't know. What can we do here? Well, actually, let's take a look at the pot. It's a pretty boring stock, but we could see we got some resistance support. I want to find something that's got a little bit of volatility. All right. So anyway, so this is US Steel. We can see this is just broken importance of support. So this probably is going to go lower too. Yeah, I mean, I think the market's going to continue to go lower. So I think we've talked about this in the class about this support level. So you see resistance becomes support. It's not a coincidence that we found support there for 3 days. And when support breaks, we make big moves lower. But anyway, what are trading models? Well, trading models are just sets of rules, right? A lot of people think that, and I see a lot of beginner traders with, all this crazy stuff on it, like GAN theory. I don't even know what the hell it says. All right. And I don't know. Let's throw some other stuff on here. Fibonacci spiral. I don't even know what the hell this is. I don't even know what any of these things are. I mean, I guess I do in theory, but I see these people with all these different things on their charts and so forth and so on. And, it's better just to keep it simple. We focus on our trends, our levels, our momentum, but let's talk about trading models, right? I'm just going to throw an indicator in here, which I like to look at. It's called the Bollinger Bands. It's very simple, very logical, very easy to understand, and it's frankly very effective, which is why we look at it. So a lot of the markets, a lot of the algorithms and the computerized programs that trade the markets are based on statistics. and a lot of strategies are based on statistics. What Bollinger Bands shows you is something out of the statistical realm, right? In the world of statistics, as far as I'm told, because I'm not a statistician, 95% of your data samples or whatever should 95% of your data samples or whatever should come within 2 standard deviations of the mean. So the Bollinger Bands, these 2 red lines, the standard default, are 2 standard deviations above and below the 20-day moving average, right? So this is just a random stock we picked out, US Steel. So an entire training model can be based off of this. Now, the model is not necessarily the indicator. The indicator is like an instrument. It's like a guitar, right? Pretend you're a guitar player. The indicator is your guitar. What style of guitar are you going to play? Are you going to be a classical guitarist? Are you going to be a blues guitarist? Are you going to be a rock guitarist? You know, it doesn't, there's no right way. It all depends on your personality. So 2 different traders might look at this thing and have a different interpretation. So that's what trading models are the rules, the interpretation. For example, one trader might say, hey, if the particular stock, and right now I'm looking at the consumer discretionary sector, gets below the Bollinger Bands and then gets back within it, that's my buy signal. That's the rule. We get below it, we get back above it, that's the trigger. Trading models typically consist of 3 things: what we call a setup, a trigger, and an exit strategy. The setup is the thing that tells you get ready, get set. You know, if you're like gonna be you know, like if you're racing, if you're a sprinter, right? You line up, it's like get ready, get set. But you don't go until you hear that gunshot. So the setup could be, oh, it closed below the Bollinger Band. We're outside of the Bollinger Band. It looks like this thing could reverse. Remember, 95% of trading should theoretically be within these 2 bands. So if we get overextended below it or overextended above it, these computerized programs and algorithms and so forth are going to target this because they're going to be expecting a reversion to the mean or a reversal. So in this case here, we get below the Bollinger Band. What happens? We reverse. Here we get back up to it. We reverse. Now here, you'll notice that we're below it for a few days, but this is just our setup. So you would have bought here, you would have sold here. We got back here, waiting for another buy opportunity. We close within the band, so that's your buy. Now here, you probably would have traded sideways, then been stopped out for a small loss. So that probably would not have, you know, that would have been a small loss. And like I said, losses are part of trading. They're unavoidable. But our next signal would have been here. You know, we go outside the band, we close back within. So you would have this pop from 173 up to 179. And the next one, we get outside, we go back within, we get back up here. Another trader might look at the same thing and have a completely different interpretation of it. Another trader might say, you know what, I'm not going to even wait for it to get back within the band. For me, if it gets to the band, that's enough for my signal. Another trader might say it's got to get outside the band and then close within it for 2 days. That's my signal. There's no one right or one wrong way to do it. It's all about interpretation. So these are the Bollinger Bands. So I'm going to throw another indicator on here, which measures the same thing, but in a different way. I'm just going to throw in this relative strength index here, which is down here at the bottom of the chart. This is what we call a momentum oscillator or a momentum indicator. And in trading, what we want to do is look for things that are at extremes, because things that are at extremes tend to reverse or revert. We don't want things that are boring. You know, we don't want things that look like they're not going to move. We want things that are, Overbought or oversold, it's like stretched out like a rubber band. You know what I mean? And things that are stretched out tend to reverse. So let me just throw another random stock in here. I don't know. I'm going to pick a random letter, H. Is there an H? Hyatt Hotels. All right. So now let's look at what could potentially be a trading model here. Remember, these are the tools. These are the guitars. What is going to be your signal? And here you could have wow, look how good the Bollinger Bands work on this thing. Just employing that same strategy. Look at this. We would have bought here. We would have sold here. We would have bought here. We would have sold here. We would have bought here. We would have sold there. So yeah, so every stock has a different personality, and some of them, what works on one might not work on another. For some reason, it seems like the Bollinger Bands work really well on this height. But this could be a trading model with a little bit of a, more defined rules, right? And in general, the more rules you have, the less trades you'll get, but the more accurate they'll be. So pretend now we have a trader that says, okay, here's my rule. If at the same time, the Bollinger Band is broken on the downside and the RSI indicator shows oversold. So instead, in other words, instead of it's not just one signal from the Bollinger Band, we're looking at we're looking for simultaneous signals from two different indicators. So you could say if we get below the Bollinger Band and at the same time as the RSI gets down to this lower threshold, that's our setup. If the RSI gets back within the range, that's our trigger. So this would have been a buy. You could have the same reverse rule here. If the stock gets above the Bollinger Band at the same time as the RSI says we're overbought, that's your sell signal. So, here would be another sell signal. So trading models are a combination of rules, right? For trade entry and exit. Then we have other things too, like how much money are you going to put in each position?
Right.
What's your risk going to be? But I think, Rodrigo, people get too caught up in thinking like if you have all these fancy looking charts, you're going to figure out some kind of a secret, but it really doesn't need to be that complicated.
Yeah.
A simple little model like this is easy to understand and build, and it's going to be effective.
And Cypher there, Cypher is he's in the chat there. I'm really happy. It's always nice to see this guy there. And I remember when Cypher signed up. So it says, if anyone debates on signing up, trust me, trading with a group will change your trading career. The last 2 days I made so much. And Cypher's been out here posting out his trades. I remember we were both shorting AMD a while ago. And that's the thing, Mark, you have all these students who apply what they learned. And they apply it, they post it in those chat rooms. They learn together, they trade together. It builds really a good sense of community. And especially in these markets, like trying to figure this out on your own in 2020 was one thing, everything was going up. But right now, Mark, there's so much happening, especially with the Fed, and things that are happening outside the Fed, right? So that's the cool thing about the school, that it doesn't matter what the market will throw at you, you will always find a way to trade and be able to, successfully trade and also learn, more importantly, right? Because you're learning this today, but the market in 2 years or 1 year is going to be different, and the chat will be different, and something else will be moving the markets, right? So you'll always have to do this. But if you do it with Mark, he's been doing it for 20 years, right? Mark, I mean, you traded with Mario Gabelli, Steve Cohen. I don't know if the folks here know, but there are some pretty high up folks in the trading world.
Well, Steve Cohen now is most well known for owning the Mets. And supposedly that show Billions is based on him, but I've never seen it. But I can't tell you. I guess so. Someday I'll probably sit down and watch it, but I can't tell you how many people, when I say, "Oh yeah, I worked at SAC," they're like, "Oh, is Billions right?" So I've never seen it, but but Steve is, he's a legend, man. It's like taking piano lessons from Mozart. You know what I mean? It's like to learn from a guy like that. It's just, I think at the time I was there, I probably didn't really understand how privileged I was, to be in that kind of environment. But I learned so much here, and that's really where I first got my thing about like reading charts, is like at SAC. Well, at least when I was there, all the traders, it's all just charts, charts, charts. It's supply and demand. I mean, they have different strategies and so forth, but
Right. And Mary says Steve Cohen is on Forbes 100 richest. Yes. And I mean, so Mark Putrino traded with Steve Cohen
and Gabelli's probably on there too.
and so just to recap here, because I'm not sure, I don't know, I'm not sure if we did this at the beginning, but you've traded with some of the best traders out there, like investors out there, known to mankind, man history, pretty much. Steve Cohen, I think SAC fund was about like 27 billion when he was there.
It's
And
probably even more. I mean, and now it's called 0.72, and it says it's now a what we call a family office, where basically it's managing like Steve's money, right? He brings in people to manage his money. But yeah, but Gabelli's, he's up there too. I wouldn't even be
yeah,
surprised if he
it's
has
about like
as much money.
last time I checked, which was a couple months ago, Gabelli was about $34 billion. So I mean, these guys are trading, they're trading with big money, and you traded small caps and other things with them, right?
Yeah, actually, when I was for working for Mario, I actually worked on his broker dealer desk, and I was a market maker. And one of the things, Rodrigo, when I first came into this retail world, is to find out, how many people hate market makers so much. And I will tell you, like, one of the things we do in the class, I think, is I try to dispel some of the confusion or misinformation about what goes on Wall Street. And I see a lot of things like people talk about, oh, like market makers this, or dark poolers that, or algorithms this. And there's just a lot of confusion. I can tell you with 100% wholehearted confidence that when I went to work every day, when I was a market maker, I did not think, oh, how am I going to go take advantage of the little guy? Market makers' main job is to work orders for their clients. The clients of market makers are the buy side funds, the hedge funds, the institutional money managers, the people that need to pay a commission to get a trade done. If you're in a hedge fund, you need to pay a commission to have a trade done, just like anyone listening to me, right? So the hedge funds, the institutional money managers, they have to trade with brokers. A market maker is someone who works at a broker that has a particular savvy or expertise in a particular sector. For example, if I used to know all the people over at Cowen, and they did a really good job in their healthcare trade. So if I had some healthcare stocks I needed to trade, I might call Cowen and talk to my friend, and we would talk about who's better, Eli Manning or Peyton or Tom Brady. Of course, we know now who is. But anyway, it's like the guys there, the market makers, they know healthcare inside and out. They know all the stocks. They know all the research. Their main job is to get me a good price. They're not out there probing the markets looking for, oh, how can I rip off the little guy? So that's a myth I like to dispel, because frankly, I don't like it that people don't like me because I was a market maker, which I never even knew until I got into the retail world. What are algorithms? How do hedge funds work? Who really runs Wall Street? People think like, oh, the hedge funds run Wall Street. It's not. It's the pension plans. The hedge funds are not typically oligarchs, right? Like Steve Cohen at SAC, yeah, he's got his money in there, but he's basically managing money for his clients, right? He manages money for his clients. He made a lot of people rich, or gave a lot of people exceptionally good returns. Who are the clients of a typical hedge fund? A pension plan, a church endowment, a university endowment. The last fund I was at, our biggest account, right, which was a hedge fund, had basically two clients in it. One was a teacher's pension plan, and one was a church endowment. So this whole concept, or this whole myth of like, oh, it's the little guy versus the big guy, it's just a complete fallacy. It's not how the market works in the real world, right? In the real world, I'm a hedge fund trader, or I work for an institutional money manager, that has different products. One of the products is a hedge fund, or it could be a mutual fund, right? I know ultimately at the end of the day, my clients, which my job, my ethical responsibility is, it's not about what's right for me. It's not about what's for my firm. It's about what's right for the client, right? I know that my clients ultimately are the little people. Now, if I have an order and I throw it over to Goldman Sachs or whatever, or like I said, Cowen, and they're trading it, their job is to do a good job for me. I am their client. Their ethical or moral or fiduciary responsibility is to take care of me, and mine is to take care of the clients. So this whole like Goliath, Rodrigo, like the hedge funds are out there to rip the little guy off. It's just not how it works.
There's definitely a lot of crazy stuff out there. And Cypher on the YouTube chat says, last 2 days were the best days of my trading career. Yesterday was great, but today was icing on the cake as I made money going up and money going down.
Cypher, what did you do? What were you in?
Let us know, Cypher, what trades you were in. Also, he says, the best part of my day is joining the class in the morning, going over the sectors with Mark. So even though it's called the trading school, yes, don't let that fool you. Mark will be going over sectors, and this is what he used to do back in the day when he was a hedge fund manager, right? He had a meeting with the brokers, right? Something like that, Mark, in the morning. And you kind of
you don't have the meeting with the brokers. You have the meeting with like your investment team. A typical fund, there's a morning meeting, right? Typically, it's usually pretty early. It's 7 a.m. A lot of people think like, people in this world don't work hard, but they're the hardest working people that I know of. A lot of these guys literally work 24 hours a day, 7 days a week. But anyway, your typical meeting is in the morning, right? And it's usually the trader who conducts the meeting, because on an investment team, you have different people. You have the portfolio manager. They're the ones who ultimately decide what we're going to buy. We're going to buy Apple. We're going to buy Hyatt hotels. We're going to buy whatever. The analysts support the portfolio manager. The portfolio manager might say, hey, I'm thinking about buying Hyatt hotels. What do you think about it? Are there other hotels that are cheaper? In other words, can I buy something that has a better valuation or whatever? So the analysts support the portfolio manager. The trader is the person or the team, like in my situation where I was overseeing people, that actually decide what's the best way to buy and sell this, right? So we have portfolio managers and we have traders. Now the traders, assuming they're doing their job, are going to know what's going on in the market. So the traders conduct the meetings generally, and this is what we talk about. Hey, we're seeing this in this sector. We're seeing this in that sector. This sector is oversold. This sector has been crushed and it's oversold and it looks like it's at support, right? So then the portfolio manager might say to the analyst, let's find some stocks in this sector that it's time to invest in. So the kind of my, and I guess my vision that like Neil and I came up with, and, Rodrigo came up with, when we really started talking about this, last summer, was, like what happens in the real life world when, in the real world, when someone who's a hedge fund trader shows up at work every day, like what do they do? And this is what the class is based on.
And Cypher says, I got an NVIDIA yesterday going up and SPY going down today.
All right. Awesome, Cypher. And Cypher actually showed us pictures of his rig today, man. His trading station looks pretty nice. A lot cleaner and less messy than my place is. But yeah, so cool, man. That's awesome, dude. So yeah, that's kind of one of the things I want to stress to people is that, when markets are going down, it's not good, right? We ultimately want everyone to do well. We wish the market could always go up. But that's just not the way it works. So if the market's going down, I don't want you guys to be afraid, or, there are ways to profit from it. There are ways to hedge yourself from it. You can go into the options market. Like we talked before about the financials. So you can buy inverse ETFs.
Right. I would say how to know if this is for you. Ask yourself this question. Whenever you buy a stock, does it go down?
How about this? Do you want to make money? That's the real question. But yeah, so anyway, so what the big part of what we do is, we let the market tell us what to do, because no one's smarter than the market, and I think, unfortunately, one of the biggest problems people have is that in the financial media, or the experts, or whatever you want to call them, there's so much misinformation and confusion. And one of the catalysts that made me kind of want to go in this direction at this point in my life was, I wanted to start a firm where I sold, technical analysis research a few years ago. And for various reasons, it didn't work out. One of which was they were making all these changes in the laws where firms had to change the way they, paid for research. And then COVID came along. So, it was just like, all right, well, whatever, this isn't going to work. So I'll never forget, like, one day I was just, it was early morning. I was checking out the markets, and I see this newsletter advertisement. And it's just like, oh, this recommendation I gave you last week, doubled or whatever, in price. So of course, as a trader, I'm obviously going to take a look at it. Oh, this person says they doubled their money. So this is what happened. Every stock has a bid and an offer. The bid is right now, the highest price anyone in the world of that stock is willing to pay.
Hey, Mark, really quick here. Want to give a shout out here to Tess. Welcome to the trading school, Tess, newest member here. Welcome. Let's go.
Oh, thank you, Tess.
And
thank you. We have another Tess in the class too.
Uh-oh. And then Ozzy Aurelius is asking, can I make payments on the special monthly on their credit card? Not sure what that means, but it is annual, Ozzy. So yeah, let's go ahead and carry on. Just want to give a warm welcome there to the newest member.
All right. So yeah, so we have to let the markets tell us what to do, right? So going back to this newsletter I was talking about, where the person who wrote it said, I've doubled your money or whatever.
Right.
Every stock has a bid and an offer, right? That's just the way the market works. The bid is the highest price in the world anyone is willing to pay right now. The offer is the lowest price anyone is willing to sell at right now. So a stock like Nvidia, for instance, I got on my screen here. I don't know if it shows the bid and the offer now because the market's closed, but this thing might be a bid of, 188.65 to 188.67, because this is a very liquid stock. So if you just came in to sell at the market and sold 100 shares, you would receive 188.65. If you went in and bought 100 shares of the market, you would have to pay 188.67 if that was the spread. All right. That's just the way the market works. Now, with this particular newsletter I saw, where this person recommended a penny stock, the penny stock went from 1 to 2. So their claim was, I doubled your money. But in reality, the bid was 1 cent. The offer was 2 cents. So maybe on paper, or maybe technically, this stock doubled, but in reality, it didn't move. There's no way anyone could have made money on this. So I saw that ad, and that kind of, I don't know, in a lot of ways, it kind of upset me, because it kind of bothers me that there's different things going on. There's people that think they're experts and they're not, right? All right, well, they might work hard, but you're still going to get bad information. And there's people that are just downright shady. So, I thought, like, hey, man, maybe I'll start trying to teach people about this stuff, because there's so many myths and everything. So here I am now. Now I'm out at Benzinga, and things are going great, Rodrigo.
And Born to Be Free just stepped into the chat now. Let's go.
We're going to be free, and I are going to be rocking the house on
We
and a bunch of the other students at Vegas, and hopefully you're there, Rodrigo, on
Yeah,
next
yeah,
Thursday.
definitely. So Born to be Free, Cypher, these are some of the OG members of the trading school. Every time we do these sessions, they pop into the chat. It's like it's great to see these guys out there still working, still doing their research, trading, applying what they've learned, loving the community, helping it become better as it continues to grow, right, Mark? So, and we have a chat here, and that's what I was asking, right? Like, so like if you feel that every time you buy a stock, it goes down, right? So like Val in the Zoom chat is, why does it happen so often? As if like they are watching and targeting me. I watch a stock going up, it's skyrocketing. The moment I jump in, it just reverses right away and begins to crash. It happens all the time. And what's really behind this? And I think really, Mark, that's your field. Really, that's where you help the folks really understanding levels, momentum, trends, technicals, all that other stuff, right?
Yeah, I mean, yeah. Yeah, just because something is skyrocketing, at that point, most of the move might be over. You want stuff, you don't want to buy stuff like, let's look at this NVIDIA here I have on my screen. You don't want to buy something here after it's skyrocketed. You want to buy it down here after it's been beaten down. So if something is skyrocketing and it's up big, there's a good chance that it's what we call overbought. And there's a chance that it reverses. You want to do the opposite generally. You want to buy stuff that has been really beaten down and been crushed and start to buy it on the way up. So that's one of the things we talk about. Like, I know hindsight's 2020, but right here, if we were looking at this, you don't want to buy it up here. You want to buy it down here. It's been getting crushed. It's been getting beaten up. And now it starts to go higher. So you're looking at it the wrong way. And you don't want to buy stuff that's already up. You want to buy stuff that's down that looks like it's about to go up. So Rodrigo, I'm going to take a 30-second break and go get myself a glass of water. If you're
All right. Yeah, let's do it. No
I'll
worries.
be right back.
Yeah, and we got a couple folks there born to be free. So there's a great community out there in the trading school. Folks, let me go ahead and show you this really quick so that Mark can go ahead and fill his cup of water there. So sharing the platform. So this is the video library, right? That's what you're seeing. That's really where all the recordings are located, all the classes, Q&A sessions, office hours, everything is going to be there waiting for you when you need it. This is how it looks like whenever you're in the live class. So you can see there's a live, this video here as an example. I'm just going to click play on this.
Try to be somewhat courteous and professional. This is what happens when you have a chairman who doesn't know what the hell he's doing. I was just thinking about his speech ugly, like big time type thing where they're talking about it on the news.
So I think he was talking there about Jerome Powell, I think. And basically that's where you see the live class. You do have a chart in the bottom there. You can hide it. You do have a chat room on the side, and this chat room that you have this way on the right side, it's only for, it will only open once you have the live class. So questions about what's going on. Hey, Mark, can you explain this a little bit more? Can you look at the stock? That sort of stuff. And that's when you're live, right? The live trading rooms are these right here. So Cypher, Born to be Free, maybe you guys can tell me what's going on here on the student plan project, exactly what that evolved into. I think you guys are trying to find a trading system. In the meantime, folks, look at this, the student trade ideas. This is where all the students are posting their trade setups, research, including Mark, right? You can see Mark P right there. That's him. Questions for Mark. If you cannot attend the Q&A sessions or the live sessions, we do have a chat room just for you to ask questions to Mark. And you have all these weekly previews that he's posting. These are new, right? So you guys get that. Mark's trade ideas, of course, you get his live trades, entries, exits, updates, class files. If you guys want to quiz yourself, go ahead, feel free right there. But yeah, I was just showing them some things there in the school, Mark.
Yeah,
And
one of the things people might be saying, like, why is Rodrigo showing me a presentation of a Clint Eastwood movie? And I guess I should address that. Well, the movie, one of the greatest movies ever made, right, back in the 60s, was The Good, the Bad, and the Ugly. And the reason why I wanted to point that out, or why I thought it was kind of like, a thematic thing, was because when markets peak, they peak at different times. People kind of think like everything sells off at the same time. Like if the market goes down, that's it. But that's not how it happens. This market has been unwinding for a while. I think in the class, we probably really started to take on a bearish tone, in December, right? And now, now kind of everyone's kind of picking up on it finally. But the reason why I had the good, the bad, and the ugly and the reason why I had it inverted is because I wanted to kind of say the ugly, the bad, and the good. And that kind of tells us how, when a market starts to top, the ugly stuff goes first, the bad stuff goes second, but eventually the good stuff gets caught up. Back in the internet bubble, the internet stocks peaked in March of 2000, right? The financial stocks didn't peak until November. So on my screen here, I just, I kind of forget a lot of the old, what all the great or the big, Reddit stock things were. But anyway, look at this particular stock here. This Ethereum was a big Reddit stock, right? And if we go back to last year, this thing was at 48. A month ago, it was at 2. Okay. The first stuff that goes down, that rolls over, is the ugly, the garbage. I mean, I'm not saying that this stock is garbage. Don't get me wrong. I know nothing about this company. But in general, the companies that don't make any money, they're the first to roll over. That's the ugly. The next stuff to roll over is what we would call the bad, which are, legit companies, but that aren't making any money. And then the last thing to go over, because when a market goes down, and eventually it all goes down, are what we call the good, the Apples of the world, the Microsofts of the world. And even to bring that a little bit farther to consumer staple stocks. So this is consumer staples, right? This is the stocks that are considered safe. Food makers, medicine companies. Look at this. This peaked in April. Let's just assume I'm right, and we're going to go into, this market itself is going to go on for an extended period of time. Consumer staples peaked in April, right? Last month, a few weeks ago, assuming we keep going down, right? So this is the consumer staples sector. Now let's go over to the technology sector. Okay, here's technology. Where did technology peak? Technology peaked in December. So we have two different parts of the market peaking at completely different times. Technology peaked here in December. Consumer staples peaked here, assuming we keep going down, in April. So different parts of the market go down at different times. It's like an unwinding process. So that's one of the reasons why, and I'm sure Cypher and Born to Be would tell all the potential new students who hopefully will join, at least give it a try, that, markets do these different things. And by understanding what's going on in these various sectors, we can get kind of insight into where the broader market is going to go. And then from getting insight into where the broader market is going to go, we delve into it a little bit more. And that's where we come up with our trading ideas. Like if we see a sector that's really oversold, we might say, all right, it's due for a bounce. Let's look to the stocks within that sector for the ones that are the most oversold, that look like they're at a support level. And those are the ones that are going to potentially bounce. So it's, it's not like people are like, obviously, and I can completely understand, like, oh, people want trading ideas, right? They want to make money. But in the class, I think what we're more about is teaching about like the themes that are going on in the market. Because within the different themes, there are different ways to make money. Like the whole theme of, all right, well, we're seeing this kind of flight to safety, meaning money is coming out of the stuff that's ugly, bad, and going to things that are considered, say, good in the sense of like we're very conservative. So where can we make money there? And like one of the things that we came up with, I think, was Coke. I mean, I haven't looked at Coke in a few days, but all right, so Coke's come back a little bit, but like we got our idea that we saw that the consumer staples sector looked vulnerable or weak, I would say. And we had this here, which is not a pattern we talk about a lot, but it does have validity. You don't see them that much, but we call this like a megaphone or a broadening formation. And these things tend to be bearish. It shows a market that's kind of out of control. So remember, we're talking about this here on April 29th. So we're saying, hey, this consumer staples looks weak. Coca-Cola is in consumer staples, which, that's a debate for another time, why if the economy is coming to a crash, why you need Coke. But for whatever reason, the people at S&P decided to put it here. So the idea was, all right, well, this thing looks weak. It's probably short. Where will there potentially be support? Levels that were resistance can become support. Look back here. Lo and behold, let me give us a better color there. I'm going to go with, I guess I'll just go with black.
Yeah, and it's really great to see, the impact that you have on many of these traders. Born to be Free is going to go have some chicken fajitas. So
Okay.
he says, later, guys, join. We are one big happy trading group and we work together. Be active and check out the class. Shout out, man. We'll see you in Vegas there. Cypher says, for anyone who thinks, and I remember like specifically when I was helping Born to be Free and Cypher sign up a while back last year. And Cypher says, for anyone who thinks if they think they will see value in this class, before I joined this class, I was bleeding money. I admit it. I lost so much my first year of trading, but it was with risk management. So it's great to really see the impact, Mark, that you have with traders. I know it's helped me a lot. Personally, I trade options, so I get much better entries, much better exits. I'm not just kind of holding and before I kind of just for some really reason, I don't know why, but when I was new and everybody's starting, you really don't know what dictates stocks moving up or lower and what levels you look at and all that stuff. But you're somebody who's been doing this as a hedge fund manager for 20 years, so this is coming very easy to you. But
Well,
really,
I don't know about that,
but you can explain it to folks there in a way that it's very easy to understand. And Cypher finishing off there, and the help with Mark, I've improved so much. I'm actually going to aim to retire early and trade into my retirement. Damn, Cypher. And guys, you don't believe me? Like, go to the YouTube chat. Like, Cypher has been a loyal student from the beginning.
well, I'm still thinking about that chicken fajita.
Yeah, and let's see, Franco, what's up? Franco joined on December 31st, 2021. All right, if there's any other members, let us know when you join. It's been nice to see that. To see some of the real OGs here. So some folks are asking, where does Mark come up with the trade ideas? Very interesting. Well, I mean, when Mark does scans all the sectors and he's going over all the sectors, he finds strengths and weaknesses. From there, that's pretty much the approach. But more importantly, it's when to trade, right? Doesn't matter what chart you're looking at. If you don't know how to trade the charts, you're going to lose money.
We don't pull trading ideas out of the air. The market tells us what to do. So when we see something that's really overbought, when we see something that's really oversold, that's what tells us what to do. Like, for example, just looking at this Coca-Cola trade here, when I showed up at when you go into the day, you got to be kind of agnostic and just, don't go in there with any preconceived notions. And when we looked at this, Coke trade, I don't know, whenever it was, April 29th, I think. It's like, all right, so we're scanning the markets. Oh, consumer staples looks weak. Oh, let's delve within the consumer staples sector to look for stocks that might look exceptionally weak. And that gave us this Coca-Cola short idea. Now, I don't know if a lot of the students got involved. I know some of them did. This might not sound like a lot. It was a $2 drop, but if you're an options trader, this could have been a big move. And look where we happen to find support. So let me take you through the process here. Going through the market, going through the sectors, we saw that, hey, consumer staples looks pretty weak. It looks like it's about to break down. All right. So I'm going to show you the XLP, the consumer staples sector. One of the things we do in the class is that we go through these sectors when we're looking for trading ideas. And we pretty much do it every day. So anyway, when we started to see the consumer staples sector was weak here, and it looked like this was breaking down, the thought is, all right, well, this is just kind of a guideline. I mean, some people trade this, you can trade options on this. You can make a completely legitimate trading strategy just based upon these ETFs. But when we saw this weakness here, we thought, all right, well, let's look within the sector, because this is the average. This is the aggregates. This is, some things are going to move more than this. Some things are going to move less than this. But we go into the sector. We look at the stocks within the sector. As it turns out, Coca-Cola is one of the biggest stocks in the sector. I believe it's the third. And it just happened to look pretty, sorry about that. It just happened to look pretty weak. So we got the idea from looking at the sector, right? But then with looking within the sector, we figured out a better way to get more bang for the buck. So I think a big thing is, you look at the sectors, you look for the themes, what's going on. This sector is overbought, this sector is oversold. And then you look within the sector for the stocks that are the most overbought or the most oversold. And if you could find a stock that's really overbought or really oversold that just happens to be at a support or a resistance level, well, then, there's a trading idea for you. So we go into the market agnostically, right? And then we look through things, and if we're doing it right or whatever, I don't know, maybe we're doing right or doing wrong, but we let the market say, hey, dude, man, hey, this thing is oversold, it's getting crushed, it's at support, there's a good chance this thing is going to bounce. So then we take that, and what we do is we put it on our watch list, and our watch list are what? Things that are set up. We talked before about trading models. The setup is the get ready to get set signal. Something's oversold, it's at support. Something's overbought, it's at resistance. That's enough to put it on our trading watch list. The next step is, what's the trigger? Has the reversal started? Has the breakdown started? And that's our trigger. So we might have a watch list of, I don't know, 10, 20, 30 stocks that all look like they're primed to move. Maybe you have 30 stocks on your watch list that look like they're primed to move. Maybe 20 of them don't move. Maybe 5 of them move in a different way that you thought they would.
Right. And
maybe 5 of them move and got your trigger, and those are the 5 you're going to make money off of.
Keep in mind here, Mark, that the folks also do get Benzinga Pro, where they do have pre-market scanners, aftermarket scanners, filtered. You can filter them by sectors, all that other stuff. You can filter your news feed by your watch list. You have you have a lot of tools there that can really just enhance and just make the overall experience better there, Mark, because even though, as the students learn and all that, right, the tools they get in pro, they start understanding how they work, and it just helps them with their trading, because you can only do so much with education, but the tools right, that you get with that education also give you that extra boost, right?
Yeah, and in this school we cover a lot of different, it's a trading school, but you got to understand there are different trading styles. So let's look at this, because I like, all right, don't make fun of me, but I like pro wrestling. I mean, and I haven't watched it recently, but when I was a kid, I was a big pro wrestling fan. So like BZ Pro has all this like cool stuff here, right? So now we're kind of getting away from the trading world and kind of getting more into the investing world, but some of our students like investing. They have a long-term thing. So I just happened to bring up WWE, and I don't even know what this could be compared to, because I don't know if who else out there could be like Big John Studd or Andre the Giant. But anyway, as traders, we look at things that are like, all right, this is oversold, this is at resistance. Fundamental managers look at different things. They look at things like this. What is their PE ratio? What is the industry average? Looking for extremes. Oh, this has a tangible book value of 4.94, but the average in the industry is -9. What's going on here? Is something out of equilibrium? Is something going to reverse? Oh, and here are the peers, right? I don't know who decides that they're in the peers. It's not Benzinga. It's just I don't know, I guess S&P or whatever. So this is entertainment. Don't bother telling me it's not real, because who the hell cares? The good, the bad, and the ugly wasn't real, but it's still entertaining. But for whatever reason, they compare this to all these other companies. Like we got Netflix, we got Disney, Warner Brothers. So what a fundamental manager might look at is stuff like this. How do these guys rank against their peers? So if the price to earnings ratio of a particular company is higher than another company, well, maybe it's overvalued. So for example, a portfolio manager might look at this and say, hey, Walt Disney it's got a P of 57. That seems pretty high. This particular company down here, who I don't know what it is, but, I'm just pulling it out of there, Reservoir Media, they're losing money. So if Reservoir Media somehow turns it around and gets to the same PE that Disney is, this particular stock is probably going to go from $7.70 to whatever, $80, or whatever. So traders look for stuff that's at an extreme, overbought, oversold. Long-term portfolio managers look for stuffs that are at extreme. The market's completely undervaluing them, overvaluing them. Investors look for stuff that the market doesn't recognize. I guess that's a good way of saying it. So, trading fundamentals, there's no one right way or wrong way to do this. Now, I don't have any proof of this, but my guess is that if you averaged everything out over the long term, the best investors might have very different styles, but the returns are probably the same, like the Warren Buffett, whatever long-term, whatever. There are probably traders actually have done way better than him. But I guess what I'm trying to say is there's no right way. There's no like one style that's better than the other. You have to do what fits your personality. Like if we go back to the guitar example, are you Jimi Hendrix or are you Andre Segovia? They were each, icons, right? It wasn't like one was right or one was wrong. They just took the instrument and played it in a completely different way. You have to do what fits you. So we can look at, one of the things we do in the classes, we look at these, fundamentals, and we look at certain companies that might give us insight. Like I think one of the things we want to do a little bit more tomorrow is go into DuPont, because DuPont seemed to have good numbers, but the stock's been getting crushed. So, it's like we can kind of delve into the earnings statement a little bit. Like, were the numbers only so good because of inflation? Did they on the surface appear really high because DuPont has been raising their prices? All right, well, maybe that's good. but are they only raising their prices because their inputs have cost so much more? So maybe a company reports a good number on the surface, but underneath it's not as good as it appears. And we're actually seeing that a lot in this market environment where these companies are reporting these like kick-ass, headline numbers, but their guidance is bad. And frankly, some of the guidance I've seen is like really bad. So that's one of the reasons why I think we're the market's been going down, but in my opinion, we got a ways to go. We're probably still a way out of a capitulation, and we might be in a downtrend that lasts a few years here. But for our traders, we're going to figure out a way to profit from it. So one of the things we do, Rodrigo, is there are so many different trading strategies, and some people trade technicals off of financials. For example, they delve into all this stuff. They think like, hey, these guys are there's the street's missing something. Like we talked about Tyson Chicken, right? The numbers were great, but the only reason why they were great because they had to raise their prices. They had to raise their prices because they had to raise the cost of all their inputs were raised. So on the surface, it looks great, but underneath the surface, it wasn't great. So we took a fundamental idea, turned it into a short-term trading idea, and we also got insight into the economy. That was back here. So that happened right back here. We look at certain companies because they give insight, right? Like UPS, FedEx, companies like that have a lot of exposure to various parts of the economy. And Tyson Foods is one of those things because back in February, we started to talk in the class about this theme of inflation. I mean, frankly, I've been talking about inflation for a year and a half. And one of the things, I show the students in the class those at a prior place where I was before I came to Benzinga. I wrote in August of 20 about how, there's serious inflation going on because of the way copper prices are going up so much. But anyway, so coming back to this thing here with Tyson Foods, right? It's like we can get insights into delving into their numbers and not even delving that deep. This stock reported numbers that were blowouts. The thing jacked up here. We looked at the numbers. We looked at the presentation, and it's like, wait a second. The only reason why these numbers were so good is because they had to raise their prices. The only reason why they raised their prices is because the cost of their inputs were going up. That's inflationary. So this led us to a trade. The stock got overbought, ran into a clear psychological level of 100, and we ended up breaking down. So this, by going through this earnings report, not only did we get a technical trading idea, we got a thematic idea too of, hey, there's inflation going on. So for a longer term thing, maybe we should look at something like this. So Rodrigo, this all goes back to this whole concept of, not having any preconceived notions, but letting the market tell us what to do.
And let's take a look at AMD there, if you can.
All right, so I think Advanced Micro's got some downside here. But again, let's go to our levels discussion. All right, so AMD bounced a little bit here. Now I got all these lines on here, and you're probably saying, why does Mark have all these lines on his chart? Well, the lines are the map. The lines are the important support and resistance levels. The lines tell us, not that they tell us, but they give us insight into what's going to happen. So we had this support level here, right? Not surprising, right around $100. People like nice round levels. So, back here, stock sells off. Where does it find support? Right around 100. We get into this nasty sell-off. Where do we find support? Right around 100. Nasty sell-off. Where do we find support? Right around 100. Goes lower. Where do we find support? At a level that had been support in the past. It's not a coincidence. It's not some random freak of nature that AMD found support around the 85 level. The reason why it was support was because it was support back here. We had a sell-off, and this is where we found support. Okay. It's an important level. I don't know why. It just so happens it's an important level. $85 is a level for this stock. So we find support, we find support. So, if you were trading this stock and you were understood the importance of, knowing where the particular levels are, you wouldn't have been surprised that this is where the bottom was, because you would have said, hey, look back there, right? Now, the same argument, you would have not been surprised we found a bottom here. You would have not been surprised we found a bottom here, because these were bottoms before. This just shows you some price levels are more important than others. So we fall down. Where do we find support? Where we had support before? We rally. Where does AMD run into resistance? At the same level that was support. It's not a coincidence. It's because there were a lot of people that bought at 100 that when it went lower, they tell themselves, I need to get out of this. I made a mistake. Shouldn't have bought it. I want to get out, but I don't want to lose money. So they place their sell orders at the same level they bought at. So it's not a coincidence that we hit resistance there. So if you're a trader, I don't know if Advanced Micro Device is going to be in 5 years. Maybe it'll be at 100. I mean, I have no idea. But I'm just talking about a trader, a trading perspective. From a trading point of view, you would have not been surprised that this is where it found a bottom because it was a bottom here. You would not have been surprised that this is where it found a top because it was a support level. So, Rodrigo, this goes into our whole thing about how some price levels are more important than others. And if you know where these levels are, you can make money off of it. I know a lot of people think like, oh, we should have some secret system and maybe use, calculus and Einsteinian physics and, this, that, and the other thing. But the successful traders in the real world, in the real institutional world, they're not concerned with all that stuff, man. And frankly, when I start hearing about like things like, Elliott wave and Gann theory and Fibonacci, it almost makes me upset because in my opinion, it kind of diminishes what we do here or what, we do as market technicians. Like we're looking at levels, we're looking at trends, we're looking at momentum. I mean, look at AMD. This thing has technical trading lessons written all over. All right. Support becomes resistance. Support becomes resistance. Support becomes support. Important levels. This level is important for some reason, 131. For some reason, this stock found support at 131. Rally, found support again. Rallies, where is it hit resistance? 131. It's the levels, man. You know what? I should turn that to a Rodrigo. Maybe we should make that one of our mottos, right? It's like keep it simple, stupid, right? KISS. It's like it's the level, stupid. It's the ITLS. I don't know if that's really a word, but it seems simple. Maybe you guys are upset because you thought I was going to unveil some secret super trading system, but you don't need to be a market guru to see that there are important levels. So something's rallying, where you look for a price target. Well, you look in the past, what was an important level? Something's going down. Where's it going to find a bottom? You look into the past. What was an important level? So this AMD has lessons written all over it. It's also got something. Now, I'm not surprised that this support broke, or when it did, because we have something here that are called lower highs, right? Markets don't go in straight lines. They go in peaks and valleys. We have a peak, we have a valley. We have a peak, we have a valley. We have a peak, we have a valley. The market's going up, peak, valley, peak, valley. When we have a thing where the peaks, as time goes by, where the peaks are forming at lower levels, we call that lower highs. And that is a bearish dynamic. And that gave us some, insight or maybe conviction that this support would break. Now, why are lower highs a bearish thing? Well, when the peaks are forming at lower prices, it shows that the sellers are getting more aggressive. In other words, the sellers are willing to accept lower and lower prices. So up here, there were sellers selling at 162. Here, there were sellers willing to sell at 154. Here, you can even say there. Here, there were sellers willing to sell at 139. Here, there were sellers willing to 131. Here, there were sellers at 122. So as time is going by from November to March, these sellers are getting more aggressive. They're getting more antsy. They're willing to accept lower prices. So that is a bearish dynamic too. So just by looking at this one chart, Rodrigo, it's like chock full of technical analysis lessons. And it's, the principles that we're seeing here, we can apply to other charts and other stocks. And that's where we make our money, understanding that there's a good chance that this is going to turn, understanding there's a good chance that this is going to bounce. So it doesn't need to be complicated.
Right. No, that makes sense here. So let's go over a couple sectors here, Mark. We've gone over some trade ideas, some of the education things there from the school. Let's look at the and also tell me, what do you think about the housing sector in general right now?
Well, all right. Well, mortgage rates are now back above 5%. Economic slowdown. I don't think things look good longer term, but let's look at a stock. Let's look at this ETF, right? This is XHB. This is the Spider home builder. And once again, it's like I just showed you on that AMD chart. The same principles apply. That's why in our classes, we have 8 classes that cover the principles, right? Principles never change. In as long as there are financial markets, there's always going to be price levels that are more important than others. That's our class number 2. Class number 3 is trends. Markets are always going to trend. Class 4 is momentum. Things are always going to have different momentum. So we go through those and we look into the market to figure out how we can make money off of that, right? We're not here just to talk about, blah, 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 blah. And let's just take a look here at the home builders ETF. Longer term, I think maybe the housing market is probably in trouble because of inflation. Not only is it raising interest rates, but it's going to raise the cost of building a house because the price of lumber is going to go up. The price of copper is going to go up. But from a trading standpoint, once again, we see our principles. Resistance becomes support. This is the home builders ETF. Support becomes resistance. Support, support, resistance. And now look at this, where we are now. Support, once again, became resistance. So if you understand these principles of markets and the fundamentals of the markets, it's almost kind of hard for me to talk about because on the one hand, it seems so simple. that people might be thinking like, oh, come on, I thought you were going to give me like some secret system or whatever. But on the other hand, it's so fundamental and it's so basic. I mean, you don't need to be a chart guru to see that this particular level here, 79, is important for this ETF. It was clear resistance. It was clear resistance. It became clear support.
Right. So,
Support
um,
becomes resistance. Support becomes resistance.
right. So what do you think now about the energy sector, Mark, and just the outlook on the energy sector as it is?
Well, if we look at the energy sector ETF, we could be on the verge of a real breakout here. All right, which frankly would be bearish for the economy and for the market. Now, the energy sector is a very small part of the stock market. It's only about 4 or 5%, believe it or not. So the broader market could be trending lower with energy stocks still going higher. So this is going back to our theme of how do you profit when markets are going lower. And one of the ways is to look into, there's always a bull market going on somewhere. And one of the things we can look into here for energy stocks or commodity-based stocks is in inflationary periods are going to be bad for the economy and the market, but they could be bullish for stocks within this sector. So here's something I want to show you all. This is the ETF XLE. Okay, so look at this. So here, let's go back to our important levels. This black line is 78. Now, this could be on the verge of a major move here. Now, why do I say that? Right? Well, it looks like it's above it a little bit, got above it. Let me show you guys this. I'm going to go back to show you how, look at this. When we talk about how markets have memories, this is what people say when they mean that. Back in 2016 and 2018, look at where the energy sector ran into resistance, right around 78. Where is it running into resistance now? Right around 78. So when big historical levels get crossed, big moves tend to follow. So there could be some follow through here, Rodrigo. And that might be bad for the rest of the market, but
Right. I want to give a shout out here to Patty. Welcome to the sorry, man. Welcome to the family, Patty. Let's go. Welcome. Let's go. But yeah, it's definitely interesting. And some of the folks are just highlighting there. They love your sense of humor there, Mark, in the class when you're whipping out jokes and all that stuff, because you make it fun to learn, easy to learn. You don't make it complicated. And you're there 3 hours a day with them. So I think that's really cool to have a teacher like that.
well, if you really want to learn how to do this, you got to do it in like the real market. You're not going to learn how to do it out of a textbook. You know what I mean? Like, if you want to learn karate, can you just get a book on karate and really learn it? Or do you actually have to go to like a real sensei and, really study hard and take lessons? I don't want to scare people off. I don't want people to think that doing this is as hard as taking karate, because taking karate is probably much harder. But I think that, a lot of people that are listening right now probably are listening because they don't know what's going on. They've heard so many fallacies, they've heard so much misinformation. They don't know why they're like losing money. They don't get it. And that's why I think that this class is a good place to be, because, it's not a guarantee, but I think it really help if people understand the way the market really works. It's way easier to make money than if you're just trading on myths and conspiracy theories. You know what I mean, Rodrigo? It's like in anything, right?
Yeah, and honestly, before, like when I started trading, looking back on it, I feel that's really what it was specifically. It's like, oh, I just bought a call or I just bought a stock. It's up, and it's just gonna keep going up, right? Let's just see how far it goes, right? Um, and really now I really consider it more of like set plan, set strategy, set levels. Uh, Actually, create a plan, not just buy whatever's trending and following the herd. Like, and that's really why I really like the investment psychology class, because you can apply it into so many different ways, not just when you are in a trade, but how you get to a trade, right? And how you get out of the trade and all that stuff.
Well, I mean, just to show you how important investment psychology is, all right. I'm just going to bring up Apple for example, just some random stock. Today, Apple lost 5.6% of its value. Yesterday, Apple gained 4% of value. So what could have happened over the past 2 days that made Apple go up in value? I'm talking about market cap now. We're talking about a company that's, wow, freaking $2.6 trillion. A 4% move of $1 trillion company is a big move. What could have happened yesterday that made it go up? What could have happened today that made it lose 5.6%? There's no fundamental reason why this happened. This happened because of investor perceptions. Nothing has changed other than investor perceptions. That goes back into psychology. The vast majority of the time, it's psychology driving the market. That's why things get overbought. That's why things get oversold. There's no fundamental logical way you can ever explain this. No academic or fundamental manager could explain why Apple went up 4% one day and went down 5.6.
Right. Really quick here, and Zen Bullish. I don't know if you know him from the school, but Zen is saying, loving Benzinga so much in the YouTube chat that I've covered tuitions for many friends who have made back that tuition on their first day. I have no salary or bonus from Benzinga and don't need or want any. So, I mean, you know, shout out to Zen.
Well, I don't even know who that is. Maybe they have a different handle in this trading school.
Yeah. So basically, I mean,
or because they're in Zen, maybe they're just kind of on the sidelines. Just watching
so the students are out here definitely showing the love today, Mark. Definitely out here today seems the day to do it, and I really think that it's partly because when you teach students how to navigate right through a bear market and through just a horrible market right this whole year, and they're able to not just stay on the sidelines but be able to profit from the volatility. That just changes the whole game, because many of them came in with the perception that they can only make money by buying a stock and holding it, right? And you show them even simple option things and things like that. So I think the trading school has evolved into whatever the market brings at us, we're going to dissect it and we're going to find a way to profit.
Yeah, because as humans, we're wrong, I mean, but the market is never wrong. I find it funny when a hedge fund blows up and they give a statement like, oh, the market has become irrational. But the key is just taking what the market gives you. I mean, in our investment psychology class, the way I like to teach, or at least the way my philosophy is, it's it's not like, oh, we're champion traders, we're gonna go blah 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 blah, or we're warriors, or this or that, the other thing. I just think it's if you look at the market in kind of an academic way and just kind of think all right, what's going on, what's the market giving us right now, let's just pretend in theory it's a day in July and the market is absolutely neutral and doesn't look like anything's going to move. Well, you know what? Take the day off, man. Go to the beach. You don't need to always be involved. But if it's a day like we're coming up upon over the next few days, where we have Apple and Microsoft, at crucial levels here, there's a good chance we're going to make a big move one way or the other. So now is not a day to go to the beach. But it all comes down to letting the market tell us what to do. I can't even emphasize how important that is, because if you go into the market with a preconceived notion, it's going to be hard. You might make money here and there, but it's going to be hard. If you go into the market with the mindset of, hey, let's see what's going on. Oh, XYZ oversold at support. Gee, maybe I should look into buying it. Oh, ABC overbought at resistance. Maybe I should look into selling it. Oh, ABC is in the healthcare sector. XYZ is in industrial sector. Maybe I should look at other stocks within that sector for stuff that's more overbought or more oversold that looks like it may move more. So this is where we get our ideas. We don't randomly pull them out of thin air. We get them from watching the market and letting it tell us what it's going to do. And,
Right.
it's not perfect. We're going to have losing trades, but it's all about stacking the odds in your favor. And that's by letting the market tell you what to do. That's what happens.
Well, and the other thing, Mark, is that there's just, there's always been more recently a lot of this, these social media things and TikTok traders, right? And unfortunately, I talk to people on the phone, a lot of people on the phone, and I hear about stories from them that, hey, there was this guy, he had a lot of followers, and such and such, and they end up falling into these things of these gurus of these kids on TikTok or Twitter or YouTube, whatever it is, and really, I understand. The reason why I think that happens, Mark, I think it's because that's maybe the first thing that they see, right? Because maybe they try to go in on social media or something, and eventually, they end up losing money, and they find their way into the trading school. But ultimately, they all wish they had it when they started. They just weren't maybe aware of it per se.
Yeah, well, I don't understand either. Rodrigo, I think, when it comes to money, people are irrational. All right. And it's not just, me or you. I think it's everyone. And what amazes me is that you'll see people that are, frankly, I'll just say it right out, are cheap. There are people that I've known that will say they need to buy a new dishwasher. They'll spend 3 weeks, waiting for a deal to save $100. Instead of spending 900, they're going to spend 800 or whatever. But those same people see an idea in a chat room and it's like, oh, you should buy XYZ. And they'll throw a massive amount of money out of it without even thinking. So there's something about money that makes people irrational. Um, but if we understand trading, we could use that to our benefit.
And again, that kind of latches back to the investment psychology class. It's just there's just so much stuff that covers, right? That some folks don't even know, right? So a lot of people when they start out, they make mistakes, and they make those mistakes because they didn't know that that's probably not the way to do it, right? But there are so many other mistakes that you could do. Like there's a million ways to lose money in the market, right, Mark? There's a million ways.
That's
Um,
a good expression. Yeah.
so
Yeah.
that
There's a lot of ways.
so
There's a lot
that's
of ways. Emotion, guessing, listening to false gurus. Yeah, that's a good point. There's a lot of ways to lose money. But I guess there's two ways to make money. You can get lucky, but that's not going to last. Or you can have a logical, you know, fundamental understanding of what happens in markets. And I think that's the better way. So unfortunately, Rodrigo, I gotta kind of get going here because I got some stuff to do, and then I got to get ready for tomorrow. So I don't know if we want to take a couple more questions before I got to hit the road, but yeah, let's see if people got a couple of questions.
okay. So if anybody does have a ticker maybe that you're trading, put it in the chat like, hey, such and such stock, I own stock or I have calls. Like for example, Mark, I bought AMD, sorry, no, Nvidia. I bought Nvidia calls like right 30 minutes into the close, and those calls expire next week. And I'm up about 40% at the close. So, I mean, this was a little bit of a lotto ticket, really. Hoping for a bounce there, but I waited till the end, and so what do you see? And this is a real example of what you can do in the trading school, and what Mark is doing now.
Well, I would frankly be bearish on Nvidia because it's below this level that was, all right. So you see how we were support back there and it's become resistance. So the way I approach the market is I would think until we get back above this level, I would look at this in a bearish point of view. Now, I don't know, I haven't done enough research to know if like maybe they're reporting earnings tomorrow or maybe something else is going to happen. But for me, and again, I'm not perfect. I'm just
Just to clarify, it's just for like, to sell like tomorrow or
yeah. I mean, for me, if I own this stock, well, I wouldn't own it. I would sell it or I would be bearish on it until it gets back above this important $200 level. If that doesn't happen, I think the path of least resistance is down.
okay, great example there. Let's see. And so Bao has Neo.
All right, let's take a look at Neo. Yeah, I mean, this looks bearish to me too. I mean, I just, there's nothing in this chart that, at least to me, looks like, oh, it's about to rally and rebound. We have the lower highs, which we talked about. I don't see anything here that would make me say, oh, it's time to buy Neo. So, I guess I would be neutral to, mildly bearish on it.
Interesting there. Good stuff there. Let's see what else we have. Christopher and Dino on the YouTube. EMPH has calls for May 20th.
Is that this end phase energy?
Yes.
All right, let's take a look at this. Yeah, and I mean, unfortunately, right now, I don't see anything here. It looks kind of neutral. I mean, from a longer term perspective, I would, it's not going to apply to your time horizon, but just in general, we got a clear support level down here. So in the future, that's something I would look at. But right now, I don't know. It's just, it doesn't look overbought. It doesn't look oversold. It doesn't look like it's at any kind of significant support or resistance. So, like something like this, I would just say, I don't really know. There's nothing that really sticks out to me about this chart to say, oh, I think it's a good buy or a good sell. If we had, sold off and we were down here and we were oversold, I would say, oh, it looks like it's going to it looks like it's going to bounce. But so, a lot of times you look at stuff and, maybe there's just nothing there. Now, whoever asked that question, maybe they see something I don't, but just looking at this from this time horizon, I just don't see like an imminent move happening that's
Right.
very big over the next few days.
Yeah, and someone sent me here a private message here. I'm not gonna say the name, but basically the message is, I've been losing money every day. I seem to, every day it's do the opposite. I'm confident, but thousands of dollars already lost. Um, so I mean, I'm gonna tell you this, and anybody else in a similar situation, don't wait and don't just wait until it's just too late. Because you've worked too hard for your money to mistreat it and disrespect it that way. So once you see that pattern, once you can recognize it, and you have to be honest with yourself, put the ego aside. It's time to find that guidance, that mentor, that teacher, and right, like I mean, literally, when you go to school to become anything, right, a doctor or even play sports, you get a coach, you get a mentor, right? Typically in business, you're on your own and that's it, right? But at the trading school, it's different, right? Everybody's helping each other out. Everybody's looking out for each other's back. Someone's talking about a trade. Mark's talking about a trade. Everybody works together. William is saying he's in the school. Good, yeah, definitely good stuff already. So,
Well, I would say to that person, Rodrigo, is that, you don't need to go all in on the school. This isn't like, oh, join up and spend all your money. It's a learning experience, So, it's not like you got to like join and here's going to be your idea of the day and you got to throw all your money out of it, or throw all your money out of it. It's a learning experience. Like, I know things look like they suck now, but if you spend a month or two in the class, I think things might look very different, right? In a month or two. And it's probably, you're probably someone who is confused because there's so much misinformation out there. Um, you know, so you're not alone, man. You're not alone. There's so many people that are like you. But I think if you come to the trading school here, you're gonna learn that is being
Right.
successful is very different probably than what you think it is. And it's probably not as complicated as what you think it is. It's not having the magic system. It's about understanding the fundamentals. Um,
Right. Interesting stuff there, Mark.
so,
Well,
so Rodrigo, I gotta kind of hit the road here. I gotta
yeah. Do you have any
start getting ready for
any
tomorrow.
closing remarks on your end before we do wrap it up here for the folks?
Well, yeah, I actually have a lot to say. I mean, I could say this for the next hour, but the market is at a critical point here. There's going to be some big movement. I think any time is a good time to join the trading school, but I think there are better times than others. And now, with all these things set up the way they are, with the stuff we talked about, with Apple and Microsoft being on support, we're going to have some movement. I think, maybe not tomorrow, but probably, going into next week, because, if everything is neutral and everything is boring, whatever, there's probably not going to be movement. But we have stuff that's overbought. We have stuff that's oversold. We have stuff that's at support. We have stuff that's at resistance. We have this whole inflation thing. We have the bond market crashing. We have oil going higher. We have natural gas going higher. It's like there's a lot of different ways to make money now. So now is, it's always a good time to join the trading school, of course, but now is a gooder time than other times. So I think I'll just kind of end it with that, man.
Good stuff there. Well, shout out there to the man, myth, Mr. Mark Putrino. And
All right, everyone. Well, thank you. Thanks for showing up, and I hope to see you tomorrow morning.
Yeah, absolutely. There, good stuff. I'll see you in the school there, Mark.
Okay, Rodrigo. Thanks a lot. I'll talk to you tomorrow.
All right. All right, everybody. So for those that are here, I'm going to go over a couple things that are in the trading school. Very important for all you guys that joined, Patty. These are the live trading rooms that you have with Mark and with the students. As you can see, student trade idea, questions for Mark, Mark's trade ideas, all that stuff, quizzes. You have a video library as well, where you get all of the recordings. And of course, you get Benzinga Pro. So if you have, if you do want to do your market research, all that sort of stuff, you can always look at that there. Scanners, all that stuff, watch list, breaking news, Benzinga exclusives whenever Benzinga breaks the news also. Yes, this is included, right? So if anybody does have any questions, put it in the chat. But basically, I just wanted to let you guys know more or less what this has. And the contact is in the chat if anybody does have questions. Feel free to reach out, folks. Again, this is just till midnight. Everybody that joins will get a free laptop. It's the same price when you renew next year. So it wouldn't change. It's the same one. It's not going to change on you. Anything else, folks, reach out. Thanks a lot for being here. We definitely appreciate the energy here. Shout out to Born to Be Free, Cypher, a lot of the OG Trading School members. As you can see, it's a very tight community. Everybody's helping each other out. The folks that started it, the new people that come in, it's a great energy. It's a great environment. You should try it out. There is a 7-day money back guarantee. So give it a shot. And again, any questions, reach out. So thanks a lot, folks. And we'll see you guys next time.